Good afternoon, girls and boys. My name is Mandy Moyse, and I'm here this afternoon to teach you accounting. Firstly, let me congratulate you for arriving in grade 12. What a journey it must have been for you, and you are now embarking on this journey up to about October, November this year when you'll write your final exams. Can I just also commend you for being in class today? It's hot in Cape Town, and for those of you out of Cape Town, it's 38 degrees here today, and there are learners in class at 4 o'clock wanting to learn, so I commend you for that. I want to say that accounting is not a very easy subject, and that we certainly cannot cover everything in the hour that we have with you on the respective days. There are only 8 accounting lessons for the year, so I will encourage you to come to every single lesson and to participate. I'm hoping that you have your Telematics manual with you, because I'll be working out of it and I'll be teaching and working through it. But like I said earlier on, we certainly won't be able to cover everything in the 8 hours that we have with you this year. We are only going to touch on a few important topics, and the topic I'm going to touch on today is financial statements, but I'll also talk about the important accounts that you need to know for the financial statements and for companies. So your company's module is a very, very important module. It is 60% of your final exam. So when the final exam is being put together by the examiners, 60% of that work will come out of the company's module. That includes everything you've studied in accounting in companies, right from the ledger accounts, right from terminology, right through to the cash flow statement and analysis of interpretation. So in the lesson today, I'm going to touch on the financial statements, but I'm going to focus on share capital. I'm going to focus on issuing shares and the repurchase of shares, because that's new to the curriculum. So I'll talk about that today, and then we're going to work through question 1, the income statement. There are 3 questions that covers financial statements in your Telematics manual. The first is the income statement, the second, the balance sheet, and the third one is the cash flow statement. When the next accounting session is, the teacher will talk about analysis and interpretation of financial statements. So that will be covered separately. So let us start, young girls and boys. I want to welcome all the schools that have logged on. I want to welcome you. Please interact with me. It says here 39 learners attended the session of Telematics accounting at Sinanjongo High School. So well done for the 39 learners attending the session today. I welcome you. Can you turn in your manuals to page 1? So you have the cover page, you just turn over to page 1. I don't have the page in front of me, but on page 1, there's a message from Dr. Glynis Schroeder, who's the Senior Curriculum Advisor in the Western Cape. And she's given you a few tips to success for accounting. Please read through those tips. Please study them well and follow them. Those tips will really make you succeed at accounting. And being in the Telematics classes as well is part of those tips. On the next page, on page 2, there is a table which details what you need to know in the company's module. Please, as you work through companies, I know you wouldn't have covered everything for now. You wouldn't have covered cash flow. There's a lot of work you wouldn't have covered. You'll cover it by the end of the term. But as you work through your company's module this term, please follow those tips and go through that table and tick off as you master the work on that table. After that, you find the activities. So we're not going to look at activity 1. We're going to look at activity 2 first, and activity 2 is on page 8. So can you all turn to page 8 in your accounting manual, and we're going to start with activity 2. Page 8. Can you also have open in front of you your answer book? You have to have your answer book open in front of you, and the answer book is on page 4. Activity 2 on page 4, and we're not going to go through the whole activity, but I want to show you what I'm going to go through. So go to page 8 of your activity book, And we're really going to look through 2.2.1 because that pertains to shares and share capital. And then we're going to look at the ordinary share capital note, and we're going to look at the retained income note. And today I'm going to focus on the buyback of shares. So on page 4, you'll find the two notes, the two respective notes. If you turn the page and you go to page 9, and you have to follow. I'll try and go as slowly as possible, but remember that we only have an hour. So I want to point out a few important terms that you need to know. So on page 9, they use the word issued share capital. Issued share capital. It's an important word that you need to know. Issued share capital is shares that have already been sold. So that is the number of shares. So far, this company sold 850,000 ordinary shares. Okay? So issued share capital comprised 850,000 ordinary shares on the 1st of July. So this is the rand value of the 850,000 shares, and that is important to know. So I already sold 850,000 shares and I raised 5,737,500 rand via the sale of these shares. That's important to know. There's another term, just turn back quickly to page 8. So that's issued share capital. There's another term on page 8 by 2.2 called authorized share capital, and that is 1 million. Now, learners often become very, very confused between authorized share capital and issued share capital. Authorized share capital refers to what they are allowed to sell. Okay, so they are allowed to sell 1 million shares, of which they've already sold 850. So this is just an amount to tell you that that is what they're allowed to sell, and there's no rand value attached to that at all, because we don't know how much they'll sell the other 150,000 shares, the unissued shares. I hope you got that, learners. Let's go to page 9 again. So we've settled that they sold 850,000 shares, and it makes up that value there. Okay, so that deals with terminology, the difference between issued and authorized. Right. Now let's just gather our information because we're only doing those two notes. So let's just gather our information. We're going to use information in number C, okay, because we need that information. And then we're going to use information in number E. Okay, so that's the two information we're going to need. So let's read. Okay, I'm just checking to see. No one's asked me questions yet, so I'm sure that the pace is fine. Right, just to explain to you what we're doing today. Today we're going to look at the retained income note. That's the note we're going to look at, retained income note. And we're going to look at the ordinary share capital note, focusing on the buyback of shares. Now, you might have only done the ledger accounts for the buyback of shares. So I'll show you the ledger as well as the note. Very, very important notes to have. So let's read number C. On the 1st of October, the business bought back 150,000 ordinary shares from certain shareholders. So they bought back, they repurchased 150,000 of the 850. Okay, so of the 850, they bought back 150 from certain shareholders. The bank entry has been made for the repurchase of the shares, but no other entries were made. In other words, the double entry for getting the money into the bank, that entry has been made, but no other double entry. Although the market price is 9.25, they accepted 7.40. So you ignore the market price. You want to know how much the company paid to buy back those shares. Oh, and people are already working out the average price. I'm happy for you. Okay, and the average price is actually correct, and that's from John, and I will talk through that. So, that is what they bought the shares back for. Now, you want to know two things, and thank you, John, for getting a bit ahead of me. You want to know two things, okay? What the average price is of these shares. You know that there's 850,000 shares in issue, and that's the rand value. So you want to know what the average share price is. Then you want to know how much above the average share price they sold the shares for. Oh, sorry, they bought the shares back for. Okay? So let's work out the average share price. Okay, we know that the rand value of all our shares is 5,737,500, and we know that that is made up of 850,000 ordinary shares. So we always take the rand value of the shares issued at the time of repurchase, okay, divided by the rand value at the time of repurchase. So you take that on your calculator. We're going to take 5,737,500, divide that by 850,000 shares, and you get that John is absolutely correct, the average share price of R6.75. So this amount is going to go somewhere, okay? But you bought the shares back for R7.40. If you take the 675 away, that means you got 65 cents more than the average share price. So these amounts are very, very important. That amount and that amount is going to go into the books. You will never put the 740 in the income statement or the balance sheet, or the notes to the balance sheet, okay? That 740, I'll explain to you where that amount goes into. But the 675 and the 65 cents will go into the notes, but they'll go in separately. Okay, I'm going to ask a question. Where, and I'm waiting for people to respond, in which note would you put the 675, and in which note would you put the 65 cents? They both go into different places. Okay, so I will come and answer that question in a minute. In the meantime, what I'm going to do is I'm going to put up the notes. So go to page 4. Okay, go to page 4 in your answer book. So I've already started the notes. And go to page 4 so you can fill in the notes. 2.2.1, ordinary share capital, and 2.2, the retained income. So if you can please get that on the screen. There we go. You have to study these notes, learners. Please, you have to know what these notes are made up of. This note is for my ordinary share capital. In other words, can you see I'm simply going to state what my authorized share capital is, and I'm going to put no value in there because I don't have a value attached to that. Issued share capital. How many shares did I have in issue at the beginning of the year? So this says ordinary shares in issue at beginning of year. I know your answer book hasn't got it in, so you have to fill it in. And remember we said we had 850,000 shares in issue at the beginning of the year. And the rand value was 5,737,500. That was the rand value of these shares. And people are, yes, they are right. They are telling me exactly where the amounts go to, and I will tell you in a minute. Okay? Then they said we repurchased 150,000 ordinary shares, and we're going to have to put a value there. So after that, how many shares are we going to have left? We're only going to have 700,000 ordinary shares left. So let's go back to my question. Okay, sorry. Before we do that, let's complete this note as well. Retained income note. You first start out with the balance in the retained income account at the beginning of the year. Okay, Then you add the net profit after tax. That should also be given. There's your shares repurchased. We're going to put a value in there as well. Then we're going to put in our interim and our final dividend. And when we get to interim and final dividend, I will also explain that. So let's get back to my question. My question was, where would we put the 675? And learners correctly said that the 675 is going to go into the ordinary share capital note, and the 65 cents is going to go into the retained income note. So I put my average share price in the ordinary share capital note, the first note, and then the 65 cents I'm going to put in my retained income note. That is why I had to work out my average share price, and then I had to work out, so what did I buy the shares back for? Minus my average share price, I spent 65 cents more than the average share price to buy these shares back. Okay, so let's complete the notes. So remember, here I'm going to say, if I'm moving too fast, please let me know. Let me just see, so many questions. I just want to run down. It seems the learners are doing well. They're doing well with this work. Well done, girls and boys. So I'm going to take 150,000, okay, and I'm going to times it by 675. There I take the 6 rand 75 cents, the average share price. Here I'll take 150,000. I'm just going to put it here. Okay, and I'm going to times that by 0.65 or 0.65. Please don't make that mistake to say times 65, because if you times 65, you're timesing it by 65 rand. This is 65 cents. So let's calculate it. 150,000 times 6.75. That gives me 1,100,000. Sorry, I do apologize. 1,012,500 rand. Okay. 1 million. Oh, why can't I say it? I feel so silly now. 12,500 rand. Thank you so much. So that is a negative amount. Remember, you are repurchasing. You are buying back. You are buying back shares, so you are paying that, so that is a negative amount. So you're simply going to take that value minus that value to give you this value. I'm not going to work it out now, okay, because there isn't time. Right, can we move on? So there we've got that. Let's move on. So I'm going to need my net profit after tax, okay, that must be given somewhere. I must find it. I'm looking for my opening balance for retained income, that must be given, and these values, girls and boys, will always be given. If this value is not given, and we're going to see in activity 1 or in the first question, then I'm going to find that in my income statement. Okay, then I must first work out my net profit after tax, then put the amount in here, and you're going to see it in the next question. So let me just put this up. There we go. There I have my retained income given. Okay. So I'm going to take that, 181,900, and I'm going to put that in. And then, remember I said we're going to use E? There I've got my net profit after tax, taking into account the adjustments above, was calculated at 813,600 rand. Okay, we don't need the other information, not for the activity. So let's calculate, let's put the amount in. 181,900 rand. Okay, net profit after tax, 813,600 rand. So what I'm going to do is that is two positive amounts, so I'm going to add that together. Then my repurchase will be in brackets again, and I'll take 150,000 times that by 6.65, remember, 97,500, which I'm going to subtract. That is a negative amount because the company is buying back shares. Then another payment will be my dividends. So let's go over it. That was the buyback of shares. let's go over it again. Often, companies will buy back shares for various reasons. Okay? Sometimes a shareholder, a disgruntled shareholder, wants to sell their shares back to the company. Sometimes the market is flooded with shares and the company just wants to buy back some of those shares for many reasons. The company will enter negotiations, and remember earlier on, there was a market value, and the market value was actually more than the buyback value. So for some reason, this shareholder didn't want to sell their shares on the market, they rather sold it back to the company. So when they give you the market value, please ignore that. You cannot work with the market value when it comes to the financial statements. The only time you work with the market value will be later on when you get to your analysis and interpretation. That's the only time you comment on the market value. But the market value has no relevance in your books whatsoever. The only information you can work with is issued share capital, and you use that to calculate the average share price. So you work with your issued share capital, Rand value, divide the number of shares in issue at that time, and you get your average share price. You take your average share price and now you compare it with the price that was offered to buy the shares back. And then you work out your average, and you take your purchase price minus your average, and that's how you then separate ordinary share capital and retained income. And you do that every time. How does that affect the ledger account? So let's just do it very quickly before I get to dividends, which is another explanation. Okay, I'm going to use abbreviations, girls and boys, for the sake of time, but otherwise, please, you will not use abbreviations at all. That's ordinary share capital, that's retained income. Okay, so you're going to have your balances on that side. You know what the balances are, because these are equity accounts with credit balances. So you have your balance on the side, your 5,737,500. 5 million, let's put that in. 737,500. Your retained income account, you'll have your amount, which is 181,900. So on this side, you're going to have bank, and on this side, you're going to have bank. And this is where you're going to split your average share price and your amount above average share price. So if you look at the ledger accounts, you take away the separate amounts. Here you're going to put the 1,012,500, and then here you're going to put the 97,500. So please don't forget to split that. That there is 150,000 shares at 6.75 Rand, and that there is 150,000 shares at 65 cents. Why am I showing you the ledger accounts? Because they can ask you to do the ledger accounts as well. So the same information that goes into the two notes will go into the ledger pertaining to the buyback of shares. Okay, so we got that. So let me show you then how to do the dividends. Okay, so we have two types of dividends. We have an interim, which is during the year, it is paid, and it is during the year. Okay, so that's your first dividend that has to be paid. It is mandatory that a company pays two dividends for the year, one interim and one final. The thing is, with the final, it is declared. It is not paid. Okay, so they'll just declare it, but because of financial statement purposes, we have to put it in. Remember our matching principle? It's irrelevant as to whether we paid the expense or not. We had to. This is the expense for the year. By the way, this is one of the expenses. It's a compulsory expense, but it will not go into the income statement. Your ordinary share dividends is in the nominal account section, but it's that expense that will not go into your income statement. Income tax goes into your income statement, but not dividends. So, what do they say about dividends? Here they say, dividends on ordinary shares, that is your interim. So they tell you that is the interim dividend. They give it to you. They say, dividends on ordinary shares, 315,000. I know there's some questions. Okay, so people have answered my questions. So there I'll put the 315,000, and that was given. Then, in number, this one here, the last bullet point before E. The last bullet point before E. They say, on the 30th of June, that's the end of the financial year, a final dividend of 40 cents per share was declared. So, remember, they bought back these shares in October. Okay, the buyback of shares was in October 2014. We are now in June 2015. So these shares are gone already. These shares, we don't have these shares anymore. And it says here, these shares were not entitled to an interim dividend. So that interim dividend, okay, when they calculated that, it did not include those shares. So if it isn't included in the interim dividend, it won't be included in the final dividend. So the final dividend was after you bought back the shares. And what did we say? We said that there's 700,000 shares in issue at the end of the year. After the repurchase or the buyback, there's 700,000 shares. So I'm going to take 700,000 and I'm going to times it by 0.40, not times 40, times 0.40. That is where a lot of learners go wrong because they don't work it out properly. So let me just see if there are any questions here. A little slower. People are saying go a little slower, please. Yes, I will slow down. Miss, you are a bit too fast. Oh, okay. So there's a question that says, why do you not subtract income tax? Okay, I'll answer that question now. The question pertains to this. Why don't I subtract income tax from this amount? And I will get back to that in a minute. I'll answer that question. So I take 700,000, which is the number of shares after the repurchase. I times it by the 40 cents. So I take 700 times 0.40, and I get 280,000. I plus my 315,000 to that, and I get 595,000 rand. It's a negative amount. Okay. Can I get to that question quickly? It says net profit after tax. So after tax means that tax has already been deducted. I cannot take tax off again because it's already taken out of that amount. If they give you net profit before tax, then you'll take the tax off. But tax has already been deducted. Anything after tax, tax has already been deducted. And when we do the income statement now, I will show you. Okay, let me just see if there's any final dividends to 80. How do you calculate authorized share capital? You don't ever calculate authorized share capital. They will give you that amount. It's not, it's impossible to calculate it because you don't know what the share price is. All you know is with authorized share capital, all you know is that is the number of shares I can sell. What I'm going to sell it for, I'm not sure yet, because remember, there's market value involved there. So eventually the share price increases or decreases depending on what happens in the company. And at that point, when I release those shares to be sold, then I will know what that price is. So authorized share capital, I'll know the number of shares, but I don't know the rand value, so I cannot calculate it. I hope that I answered your question. And also, they'll never ask you to calculate authorized share capital. Oh, let me just see if I can answer another question. I'm just leaning over. Sorry, I will slow down. In fact, I'm going to do another activity, okay? Also to do with buyback of shares, and then we're going to do the income statement. So let's go to question 1. Question 1 also has buyback of shares. So let's go to that one. Okay, question 1. Question 1 is the income statement. All right? You can just see there. But we're only going to do prepare the retained income note. Okay, we're going to do 2.1, the retained income note only, which also deals with buyback of shares. Then, for that, I'll try and go a bit slower. Okay, we're going to need information in A, Okay, so I know that we're going to need that information because that information pertains to shares. So let's read. We are on page 7 in your books, and it's A. It says the authorized share capital comprises 750,000 ordinary shares. That is just information. We are not expected to do the ordinary share capital note, so that is just information, so you don't do anything with that. Now they say there were 500,000 shares in issue at the beginning of the financial year. They also say a further 125,000 new shares were issued in July. Okay, important. These shares have been properly recorded. That is very important to note. These shares have been properly recorded. Okay, we're just gathering information now. Now they say, and this is the important information for buyback, this one here. Okay, now they say 40,000 shares were repurchased. That's the buyback from a disgruntled shareholder. The company bought it back from the shareholder, and that price is important. Can you see that I didn't highlight this price? Because this price has no relevance to my calculation at all. It's not important as to how much I sold these shares for. Even when I work out my average share price, it's not important how much I sold those shares for. What's important is how many shares I bought back and the buyback price. So that is the information I'm going to need. And let me just see. Information, yes, this information here with regards to dividends. That information I'm going to need for the note. Now, I can already say I don't have all the information because I'm kind of working backwards. 1.1 is the income statement. From the income statement, I'm going to get my net profit after tax. But because I'm busy with buyback of shares, I want to reinforce the average share price. After this, I'm going to go to the income statement. We're going to do some adjustments. There's some important adjustments that I want to show you. But remember, you've done adjustments since grade 10 already. That's not new work. All of the adjustments in this activity is not new work. The buyback of shares of a company, that is the new work, and that is why I'm focusing on that today. So let's go to activity 1, and let's start with the note. Let's just find the answer sheet. Not that. I prepared the answer sheet already. Oh, I've got all these papers around. Sorry, let me just find it. If you can just read through A so long while I'm just getting the papers, read through A and try and highlight the information. Can I encourage you to go into your exam with highlighters, because you need to know what information is important and what is not important. There's certain information that's not important. So there we go. 1.2 retained income note, and I have already pre-planned it. I've already written in. So please, if you can fill that in as quickly as possible so that we can start with the activity. I'll just give you a minute just to write that in very, very quickly so that we can start with the activity. So I'm going to be working on page 6 and 7 in your workbook. Sorry, 6 and 7 in where your notes are, and page 3 in the answer book. Okay, so someone's asked me how I calculated the interim and final dividend. I'm going to do it again. Okay, so don't panic. I'll go about it again, and I'll explain to you how I calculated it. So if you can just listen again. Okay, so I need the retained income at the beginning of the year. That I'm going to get from my, let me just put that up quickly, pre-adjustment trial balance. Okay, retained income, there it is, second line item. It's on page 6 of your books. Retained income 1st July 2014. That will always be given. Okay? Please take note of this amount as well. Remember, they said that at the beginning of the year, they had 500,000 shares in issue, but then we sold another 125,000 shares, and it was all, oops, that's one, 125,000 shares, and it was recorded. So the 500 and the 125 is included in the 6,750,000. It is there. It has already been recorded. So that's an important amount that we're going to work with now when we work with how to calculate average share price. So I'm going to put that amount in, 1,642,700 Rand. 1,642,700 Rand goes in there. I don't have this amount, but it's okay. I don't need that amount for now. For the sake of the explanation, I'm working out shares repurchased and dividends. Okay, we can go back to the income statement and work that out in a minute. So I don't need that amount for now. I also know that these two amounts are negatives. Now, learners, please don't forget to show your brackets. It means that you must minus these amounts from whatever you have on top. So, get into the habit of studying your format and then putting the brackets where it is needed. Although these are negative amounts, because it's in a block, I don't show them in brackets. But when I add this together to get my dividends, I show it as a negative amount. Okay, so can we work on the repurchase of shares? The first thing I must work out, and I'm hoping that I'm not going too fast, the first thing I must work out is the average share price. Before I can take anything, I can put anything here, I have to work out the average share price. Now remember, my Rand value of my shares before selling. Okay, if I'm going to read my information again, let's look at dates so that I can prove to you. Okay, it says here. Right. There were 500,000 shares at the beginning of the year, and a further 125 shares were issued on the 15th of July. That's the 15th of July 2014. June 2015, okay, which is nearly a year later, I bought back shares. So at the time that I bought back the shares, my Rand value of my shares was, according to my pre-adjustment trial balance, okay, 6,750,000. And how many shares did that comprise? 500 plus 125, that gives me 625,000 shares. Okay, that's the 500 that they talk about, and then the 125 that you sold later on. So now I take 6 million, and are people working ahead of me? 750,000 shares, Rand value, divide that by 625,000 number of shares. That gives me an average price of 10 Rand 80. Okay, they can also express, now don't get confused, they can also express that as 1,080 cents. That's really how shares are expressed. In cents, 1,080 cents. Okay, so that is our average price. What was our buyback price? Our buyback price, they said, is remember that there? 1,840 cents, also known as 18 Rand 40. So you can either work with Rand or you can work with cents. Okay, so let's work with the cents. If I take the 1840 and I minus the 1,080, let's do that quickly. I get 760 cents. I can also convert that to 7 Rand 60. Okay, so that is the amount that's above average. So that goes into your retained income note. Okay, the average price, where did we say that goes into? this will go into your ordinary share capital note. Okay, because that's the average price. The amount above average will go into your retained income note. So I'm hoping that I explained that. There are some learners who were confused and some people are getting the 760. That's right. Okay, so can we put it in quickly into our note? I'm only going to put in this amount. I don't have the ordinary share capital note, so I'm not going to even bother with that amount. But why did I have to work this out? I had to work out the average price to be able to get to the 760. Okay, so I take my buyback price minus average to get my amount above average. So now I take, how many shares did I buy back? 40,000. And I'm going to times that by, remember, 7.60. If you're going to say 760 cents, you must divide that by 100. So if you're going to say 40,000 times 760 without the comma, you must divide that by 100 because otherwise you're going to get an answer in cents here. And you need an answer in rands because that is in rands. Okay, so you must be consistent. So remember, if I divide by 100, I'm converting it into rand. 40,000 times by 7.6. 304,000. I'm not going to worry with the other amount because I don't have that note. Okay, so there we go, that's that. Then someone wanted to know, thank you for the 304, someone wanted to know from me about the dividends. So let me just explain the dividends. The dividends is paid twice per year. During the year, the company will pay an interim dividend. Then they'll take the number of shares in issue. They'll take the number of issued shares times it by the dividend that they are paying. So let's say there were 500,000 shares at the time and they are paying a dividend of 50 cents per share. They'll take 500 times 50 cents. At the end of the year, they'll take the number of shares in issue at that time times it by the dividend that they are declaring. So let's look at the information to see where we get the dividend. Okay, so your interim dividend would have been paid, okay? And your interim dividend you will always find in your pre-adjustment trial balance. And there's your interim dividend. You don't have to calculate it. It is given. It is 562,500. So there's your interim dividend. So let's put that in, 562,500 rand. Your final dividend, unfortunately, you're going to have to calculate because they're going to tell you how much the final dividend is, and I highlighted it there. Okay? Now let's read very carefully. Dividend of 65 cents. Remember, 65 cents is 0.65. If you're going to say times 65, you're going to have to divide that by 100 because that's in cents and you want your answer in rands. Dividend of 65 cents per share were declared on the 30th of June. That's the end of the year. These have not yet been recorded. So how many shares did we have in issue at the end of the financial year? 625,000 shares in issue. Where did I get that from? They told me that 500,000 shares were in issue at the beginning of the year and 125 new shares were issued during the year. So I add that together. So by the end of the year, I have 625. But remember, I sold 40,000 of those shares. So you mustn't, because I can't pay a dividend on shares that I sold. So I sold on the 26th of June. They usually say that these shares don't qualify for a dividend. Okay, so I'm going to minus that. So I'm going to say 625 minus 40. And at the end of the year, by the time I declare that dividend, I have 585,000 shares in issue. Okay, in issue. I'm going to times that by 65 cents. So don't forget, I must take away the shares that I sold because I'm not going to pay or declare a dividend on these shares. So times that by 0.65 and I get 380,250. That I'm going to add together, put it there. I cannot finish this account because I don't have that amount yet. But I'm hoping that I helped you at least with those two notes. We didn't sell additional shares in any of these activities that wasn't recorded. So generally what could happen is they could give you an opening balance at the beginning of the year. Then they could say you sold additional shares, and then they could declare a dividend. So it depends on what happens in the financial year. But you have to read the information and understand what you are trying to work out. When you work with buyback of shares, it is the price of the share that you are buying back, okay? The price, the rand value, which you are going to split into two. You're going to split into the average share price and the amount above average. That is what you're going to work with. But when it comes to dividends, you're going to work with number of shares in issue at the time that you are paying or declaring that dividend. So you have to work that out. How many shares do I have on this day that I am paying or declaring dividend? Did you see, where did I get the interim dividend from? I got the interim dividend from the pre-adjustment trial balance. If you look right at the bottom of the pre-adjustment trial balance, they'll say dividends on ordinary shares. Then in brackets, they'll say interim, and then that is the amount that you use. Can I just say, because this is the income statement that we were supposed to complete today, and we don't have enough time, but I want to go through one or two adjustments. This amount here, this is the question I'm answering. Ordinary share dividends, or dividends on ordinary shares is another way of putting it, interim. This is an expense, but I don't put it in my income statement. Okay, let's just talk about that quickly. Let me see if I have. Okay. Can they issue shares after the end of the financial year? Yes, they can in the next financial year. So a financial year is 12 consecutive months. Let me just show you that. Just remember that. A financial year is 12 consecutive months. If it starts in March, it will end in Feb. So they can issue and repurchase shares anytime. My financial statements is drawn up there. So if I'm accounting for what happened in that year, if they sell shares after that, it goes for the next financial year. Okay, so the only reason why I close off my year is to do my financial statements, is to calculate my profit, is to calculate to see where the business is financially, and then I continue transacting in the next financial year. But let me just give you a few tips for the income statement. Okay. It is only this information, oops, let me just close that off there. That information, you can see I didn't rule a line. That information there, plus some more, only this information and some more accounts, okay, according to your adjustments, that will go into the income statement. Ordinary share dividends or dividends on ordinary shares will not go into the income statement. If I look at my debit column, these are expenses, okay? So these are expenses that will go under the expense columns. And if I look at the credit, these are incomes. So credits, that signifies incomes. Debits, that signifies expenses. So if I look at my income statement, which I have here, if I look at my income statement, okay? You need to study this format as well, girls and boys. There I have sales, that's an income. Incomes will have no brackets. But my cost of sales, which is a negative, that will have, which is an expense, will have brackets. Other operating income won't have brackets, so the word that says income in front of it, but when it comes to operating expenses, that will have a negative effect on my income statement. And these will be all my debits, obviously except for cost of sales, and remember, it is sales less debtors allowances. Okay, that is also an expense, but can you see you're taking it away from the income? So my expenses will have a negative effect on my income statement. Wherever there's an expense, it will have a minusing effect. Okay, so there's sales, there's debtors allowances, there's cost of sales. Then, and I'm going through it very, very fast, but remember, you've done this in grade 10 already. You've done income statement. So there's sales minus debtors allowances minus cost of sales. Then that will go under incomes. That will go under incomes. Okay. All of that will go under operating expenses. But there's more expenses there. I've got 5 minutes left. And I want to show you 2 important calculations before I leave. Okay? I know that you've done adjustments before. But there's just, the adjustments become more tricky when it comes to grade 12. So grade 12 learners, let me show you, go to page 7. I have to move fast. Go to page 7, and I'm going to go through F. I just want to show you this one here. This is a very popular adjustment that comes up over and over and over. You have to work out interest capitalized. This is on your loan. Okay? Now they say, calculate the interest on loan. They say, the loan statement was received from Freedom Bank and reflects the following. They give you the opening balance. They give you the repayment, which, by the way, is a negative because you're repaying. That is a positive because it's adding to the balance. And then that is the answer. Okay? So, if I draw a T account, this is what this looks like. Let me show you. So, there we go. Just keeping that up. There's my T account. That's my loan account. I'm going to put the 2,700,000 there. I'm going to put the repayment there. 1,099,200. I'm going to put there. My interest is my question mark there. Okay? Why? The loan is a liability plus minus. So it becomes more on this side and it becomes less on that side. So I want to know how much interest did I capitalize. This year is my balance. Okay, so it's my balance carry down. 1,930,800. Okay, so now I say that plus that minus that and I get the interest. 1,099,200 plus 1,930,800 minus 2,700,000 and I get 330,000 interest. And that's how you work out your interest on loan, which goes into your income statement. I'm hoping, and I see some people got the answer. Please, it is a negative. Okay, so when you put it on your income statement, yes, you are going to put it in as a negative, but it's going to be in brackets. It's not going to be a negative in brackets, so I'm going to have it here, finance cost, interest expense, and I'm going to put it in brackets, 330,000. That is often worth 4 marks, just for knowing that my opening balance, that your opening balance goes there, your closing balance goes there, your repayment goes there, and then that is the answer that you want. If you follow this T account, that adjustment you will never get wrong. This has come up in almost every exam because now what's new to the syllabus as well is this part of the loan statement and capitalizing the interest. And that's the way you work it out. Girls and boys, I really enjoyed today. I know I went a bit fast, but I'm hoping that you learned a lot. I'm hoping that you now understand how to buy back the shares. It is important in your exam. It probably will be examined. It's a very small aspect of the work. But as I said, I won't be able to show you everything. Do yourselves a favor. Go through those activities. I'm going to see if we can post the answers on the site so that you can extract those answers and mark your work. But please don't just sit and not go through the work. Go through the work, mark your work, and I wish you every success in the company's module. The next time I see you, we're going to be doing bank reconciliation. So thank you for listening. I really appreciate it. Bye-bye.